Hey everybody, it's Mark Yagi. Welcome to the Market Pulse. We're renaming it, calling it the Market Pulse. Hopefully you like that name. Give me comments if you like that name. We call it the Market Update. That's kind of boring, my opinion. And my team said, let's call it Market Pulse. And so we put together this thing and now it's pulsing. I think that's cool. Anyway, great week. We are in a green market. So I hope you're green. You're not green if you're in Tesla. Like me, you're licking your wounds a little bit today after a really interesting shareholder presentation. But I'll talk about that in a second. Let's go through. Just got off my mastermind call, so I'm going to give you a couple of the slides that we talked about. You can see the market is green. We got 4 green lights. Believe it or not, you're hearing all this stuff about the market's going to crash. And you know what? It may crash, but right now it's not crashing. It's going up. And so going up is good, and I hope you're in it and not sitting on the sideline. I have a friend of mine that's been on the sidelines for 4 years going, oh, the market's going to crash. The market's going to crash. Meantime, this market is melted up, and that person has, made about 5% a year. So hopefully you're doing better than that, and you're doing well in the market. Of course, markets go up and go down. We know that. The idea is to try to anticipate when they're, not going down, but, maybe 1% of the time they crash. And the rest of the time, they just kind of melt up. And if you can take advantage of selling covered calls or, selling puts or whatever to get income into the account, then you can withstand some of these movements. And so hopefully you've been experiencing that. All right, the market. Take a look at this chart. This is the NASDAQ. And the NASDAQ is the only market right now that is not performing as well. It's doing fine right now. It's doing short-term fine. But if you look at the chart, it's not at an all-time high. The other indexes are. It's just breaking above this little handle of 18,327 right there. It's right at it, but the volume, I don't love the volume on it, but nonetheless, it's probably melting up. It's probably waiting for Tesla to go up. It probably needs a little bit of juice from Apple to really go up. But this is the only one. And so there is not confluence when it comes to the NASDAQ. It is kind of the black swan, the ugly duckling, whatever you want to call it. But look at these markets. Here's the S&P 500 index. All-time high. Here's the Dow Jones Industrial, all-time high. Here's the New York Stock Exchange, all-time high. Now, 3 of these markets are probably going to pull the NASDAQ higher. I've been saying this for 3 weeks, and the market's been, melting up for 3 weeks. It's up, it's been green for 23, 24 days. Really good stuff. And if you've been in it, hopefully you've been in some good stocks, and I'll show you some, you've been making some money. That's the idea, right? We want to really try to take advantage when the market, that tailwind is going up. And so when we go green, that's the time to be in stocks. And when we go yellow or red, that's the time to kind of pull back and get ready for the next green is the way I look at it, because the market over time goes up. It has for 120 years. This is the volatility chart. The volatility is showing there's some fear out there, right? It's above its 50-day moving average, the red line right here. And so there's a little bit of fear in the market. No, just a few months ago, we were down here in the 11s. Now we're up double that at about 2021. So there's a little bit more fear in the market, and that means the markets are a little trigger happy. So they could go down very easily. But right now, the markets are melting up, and we have to play the trends. If we're being smart, we have to play the trends. We can't be like Nostradamus and say, oh, the market's going to go down tomorrow, even though all the indicators show that it's up. Remember, we have the Fed that's lowering rates. Now, I got the next slide is going to totally tell you the opposite story of anything I'm saying. But when the Fed lowers rates, that makes money cheaper. Money that's cheaper goes into assets, if you can afford assets, and it goes into those assets and drives them up, supply and demand. So more people piling in assets because they got more money, money's cheaper, more money goes into assets, okay? Now, check this chart out. This is the TLT. This is the Treasury Bond Index, 20-year Treasury Bond ETF, okay? It's an index of the ETFs. Look at what has happened in the last 3-4 weeks of this. Since the Fed has lowered rates 50 basis points, which is 0.5%, the market says, you know what? We don't believe you. Why is that? Because the market knows that the Fed has to print more money to pay off the interest on the debt. So lowering the rates on themselves should be cheaper. But the market knows that if it's cheaper, that Treasury bills should be going up, right? That's not happening. Why is it not happening? Well, because the market doesn't believe that the Fed is going to be able to keep rates down. Why? Because things are inflationary. They're printing money. That's causing prices to go up. right? Especially assets, but also the eggs and the cars and the homes and everything like that is going up. And so the market's like, we don't believe that treasuries are going to go down, are going to go up. So treasuries are going down. So the market is now dictating to the Fed what interest rates should be. This is the beginnings or the middles of what you call the death spiral of our debt. So we are in the last stages, the last innings of our dollar crashing, and it will. We just don't know when. We have the advantage of being able to print money that the rest of the world wants. But does the world want them when they're selling off our treasury bills? Doesn't look like it. That's a sell-off from 101 all the way down to 94. That's a big sell-off in a very short period of time, right? When you're talking about treasury bonds that pay 4%, 5%, something like that, and you're selling off 6%, you don't make any money when that happens. So there's a problem. And that problem is it might lead to the next real stock market issue that we have. And that's kind of what people are concerned about right now. But you know what? That may not come for 2 years. It may come on Thursday, but it may not come for 2 years. So we don't know. We just got to keep doing our strategy, trading our system. Our system is to create cash flow. And when the market goes up or it goes down, we're still getting cash flow. That's the way our system works. Apple. So Apple is in a big consolidation from 237 down to 196. You can see that here. It is in the upper end of it. It's above the 50. It's above the 10. It's above the 21 day. It wants to go up to this 237.23. Problem is, it's not going up very much on volume. So there's not a lot of buyers driving it up. Why? Well, it's probably because there's a lot of sellers from this 237 that are holding it back. So Apple, they got new phones, they got a lot of revenue streams, but they're not an exciting company anymore. Like putting a button on the side of your phone as the big innovation this year, in my opinion, a whole year to put a button on the side of a cool camera. I don't know. I look at other companies like Tesla, and they got cars driving around without drivers, right? That's innovation to me. I think Apple is run by a CFO now, and CFOs traditionally run companies to make money. So they're little financial juggernauts, but they're not innovation stores anymore. And I think that's what you're seeing with Apple. You're seeing a maturing company that's going to be boring. It's going to grow, it's going to grow. That's, 10% a year or whatever it's going to grow, but it's not as exciting anymore. And that's fine. It's more like a utility to invest in to me now, although it does have some movement. Okay. Tesla, on the other hand, Tesla had this beautiful robo-taxi event. They called it We Robot. I watched it last night. It came out an hour late. We didn't get an apology because of the hour, and there was a person that had a medical issue, so it's totally understandable. But, Elon Musk, I love him. He's doing amazing things for the world, but he's not a presenter. And he came out, he did a lousy presentation, in my opinion. Now, he set up this immaculate cool set where these cars were driving themselves around, and all the people that were there could get into these cars and tell them, drive me over here, and the car would drive you automatically, kind of like when you're at the airport and you go to the terminal or whatever, these trains take you around automatically. That's what the future looks like. That's part of what the future he's trying to paint. He did a great job of painting that. He also brought out these robots. And these robots were walking around. There were some dancing in a little gazebo. There were other robots that were handing people, gift bags, which, to even be able to figure out how to do that right there for a robot is amazing. There were robots making drinks. There were robots having conversations, robots playing rock, paper, scissors. There was really cool stuff, right? It was a glimpse into the future. If you have a minute to watch that, watch the first, half an hour of that presentation. It's called We Robot from Tesla on YouTube. Highly recommend you watch it. You'll be like, wow, I'm glad I watched that, because in 2 years, you're going to see all that stuff come into fruition. The problem was in 2 years, you're going to see all that stuff coming to fruition. So if you're an investor in Tesla, like I am, you've been waiting for this full self-driving. You've been waiting for these robo-taxis, now calling robo-cabs is what he's calling them. You've been waiting and waiting and waiting. And now he's saying it's going to be another 2 years. So that's why the stock is tanking. You can see the stock is down 20 bucks today, gap below its 50-day moving average. The investment community doesn't like it. I think it's cool as a human, but as an investor, I didn't like the presentation, and I didn't like the slip up, which is what I believe it was, to say, in a couple of years we're gonna start rolling this stuff out. A couple of years for a lot of people is a long time. All right, NVIDIA, beautiful stock. It's on an uptrend, but it's in a later stage base. You can see it sprang up from this $50 level all the way up to 140 and then corrected down to 100. And now the stock is trying to get back up to 140. I think it'll get there. The question is, once it gets there, does it have the strength at 140 to keep going and go with some fervor? I think it's going to go, but I think there's a probability it doesn't go as much as people think it does, because it's in a late stage base, just a riskier stage base. It's a stage 4 base in NVIDIA. So just be careful on NVIDIA. If you're selling calls, if you're part of my program, I would probably say sell at the money, or maybe a little bit in the money, because you want to be able to preserve and protect if it comes back down a little bit. But NVIDIA still pays good juice, so that's good. JP Morgan Chase is up on earnings. Not exactly sure what the heck's going on, but the stock is going up, especially because treasuries are coming down. You think that would bother JP Morgan a bit, but they're the biggest game in town as far as banking and investments, so they're probably doing fine. On Semiconductor, is just one of that semiconductor play that just can't get out of its own way, but it's not killing anybody. It's just on a downtrend, not on an uptrend. If you're selling calls against this one, you're probably making a 1.5 a week. We got people in the mastermind that are using the stock and making a 1.5 a week. Amazon, I want to get to one that I think is going to be fun, but Amazon is also looks like Apple. It's between this big consolidation, 201 to 151, trying to get to this little handle at 195.37. It needs some good volume, though. It needs 100 million shares to pop through that and get to its all-time high. That's going to be a lot of work. Now, the cool thing that Amazon and maybe even Apple have going for them at the end of the year is that they got Christmas coming up. They got Black Friday coming up, Black Monday and Black Tuesday and all these different things that are gimmicks to get people to spend money. So they're coming into their big season at the end of the year. So that's probably going to help them propel up toward the end of the year and into the early part of next year. So we'll see what happens there. But they're not running away from us right now. Meta Platforms near its all-time high. MicroStrategy. I want to take a second to talk about MicroStrategy, and I'm going to make another video on this. Michael Saylor running MicroStrategy, probably between him and Elon Musk, I'm not sure who's going to be a trillionaire first, but I believe that in 5 years, both of these guys will be. And the MicroStrategy is basically turned into the Fed, okay? They've turned into their own version of printing money. Now, let me just quickly explain how it happens. So you can see, first of all, the stock, was, $35 at the beginning of this chart, and now it's 200. So that's a 6X on this chart. The weekly, I'll show you for a second here, was at 10 4 years ago, and now it's at 200. That's a 20X, okay? Did you miss it? Maybe. I don't know. Maybe you didn't. Here's why I don't think you did. So Michael Saylor, who's an engineer from MIT, goes out and borrows, and I think I alluded to this on the last market update, Market Pulse. He goes out and borrows money at let's 1.7%, something like that. He does convertible debt and he does some debt. And he borrows money at 1.7%. Bitcoin, which is what he's using the money for, he goes out and buys Bitcoin. Bitcoin over the last 4 years has appreciated about 55% on average. So when you net those two out, he's borrowing at less than 2, he's making 55, he's netting 53% a year. And every time that it goes up, like right now, it's at an all-time high. What he does is he goes, time to refinance. And he borrows against this all-time high stock at a cheap rate, gives new investors a convertible, 2% or 1%, borrows that money and goes and buys Bitcoin. Now, Bitcoin keeps going higher. Why? Because Bitcoin is a hard asset. So is gold, so is real estate, but Bitcoin is a hard asset. And if the hard asset goes up, well, it's going up relative to the dollar, which I just showed you the treasuries, right? Those are going down. And so it's an automatic arbitrage that he's built in, and it's accelerating. That's why Michael Saylor and MicroStrategy is so brilliant. And that's why it seems to me, do your own homework, but it seems to me like this is a stock. If you want to play the Bitcoin space, there's volatility, but this thing, looks to me like it's engineered to go a lot higher. I don't know how high it goes. Maybe it stops right here. I don't know. Do your own homework, but to me, it's genius, and people are starting to now realize it. Excuse me. We'll see what happens. Sorry about that. All right, so that's MicroStrategy. You know what? I'm going to look at this is the last chart I'll do. This is also a Bitcoin and crypto play. This is the exchange, the number one exchange, right? All the ETFs hold all their crypto here on Coinbase. Does that stock look like it's going higher? And it's based on Bitcoin. It's based on cryptocurrency. and it's not going higher. It's in a short-term downtrend, right? It's below its 50-day, it's below its 200, it's in a death cross. So just comparing those two stocks, you can see, obviously they're different, but one is engineering the financial future, and the other one is just kind of hanging in there. They don't have any arbitrage opportunities. They're just hoping that everything goes well and they keep getting exchange volume so that they can get exchange fees. All right, enough from me. I talked a lot, didn't I, today? Anyway, I hope you got some value out of it. If you did, give me some comments below. Tell me if you like the new name. Tell me if you like what we're doing. Tell me if you want me to analyze a stock. Every once in a while, I pick out one of the stocks in the comments and I'll analyze it. And if you don't like it, you can give me a thumbs down, but just tell me why you don't like it so I can improve, because my goal is to make some free videos and hope you guys learn some things every once in a while. Maybe come and buy a course from me or join my mastermind and I can help you and we could make money together and have some fun. But, you know, my goal is to educate the world and let them know that you don't have to just, you know, listen to Kramer or give your money over to a financial broker. You can do this yourself, right? Just takes a little bit. You watch a 15-minute video from me or somebody else. You maybe learn a system on how to do it, and then you can take control of your financial life. I always say, never give up your power in your health, your wealth, or your time. And I really believe that. So thank you for your time. Have an awesome weekend. Let's keep it going. We're green right now. Let's see if we can keep going. Take care. See you next time on the weekly Market Pulse. Bye.